Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
Good morning. Welcome to Friday. We have the ASX at breakfast for you on Kalkine TV. My name's Sage. And the ASX 200 is to dip with the global markets fall on recession fears. After surging on Thursday, the Australian share market is poised to shed some gains on the final day of the month for the global markets, tumbled on recession concerns the following day. Investors were also spooked by a rout in global currency and debt markets. With the global bonds experiencing a sell-off compared to the 1990s, we could be seeing the rhetoric change in regard to instability being the biggest risk in this still dangerous market to trade, rather than inflation. So could this cause pivots in the current hawkish strategy the US Federal Reserve has been using? Well, CEO and founder of Prometheus Alternative Investments was quoted saying on the subject, "Expect further tightening from central banks, including the Fed, as markets look for stability and transparency for the rest of the year, which will have an impact on the upcoming earnings season." It was reported by Market Watch. The latest SPI Futures indicate that the benchmark ASX 200 would start Friday 24 points or 0.4% lower. On Thursday, the benchmark index closed 1.45% higher at 6,555 points. And meanwhile, IGO Limited, Origin Energy Limited, Treasury Wine Estates Limited are among the companies which are scheduled to pay their shareholders with dividend payments today. Over to Wall Street, the Dow Jones fell 1.55%, the S&P 500 dipped 2.1%, the NASDAQ ended 2.85% lower. The S&P 500 touched a new low for the year of 2022. Apple Inc. has received a rare downgrade from the Bank of America and could be adding to the weakness of stocks experienced on Thursday. Apple's shares fell by 4.9% with the new neutral rating. The mega-cap stocks could be to blame for the decline of the NASDAQ, and this tech rout saw close to a fifth of the S&P 500 hit 52-week lows during Thursday's market session. Facebook parent Meta Platforms Inc. dropped 3.67% as well after reporting a hiring freeze, and this will be the first time that Meta will be cutting its headcount in the 18 years of operation. And this is to cut costs mainly, and CEO Mark Zuckerberg has warned his staff that Facebook and Meta will be a much smaller team by the end of 2023. It was reported by Bloomberg. In Europe, the Stoxx 50 fell 1.7%, the FTSE dipped 1.8% and the CAC dropped 1.5% and the DAX ended 1.7% lower. MSCI's broadest index of Asia-Pacific shares outside Japan ended the day virtually flat. Over to the bond yields, and the yield on the 10-year US Treasury notes was up 6.5 basis points to reach 3.772%, and the 30-year Treasury bonds surged 2.9 basis points to 3.710%. The US dollar index hovered around its recent 20-year high again, down about 0.4%, having had its worst session in 2.5 years on Wednesday. And the oil prices fall on Thursday. Oil prices fell, still weighed on by the stronger dollar and weak economic outlook, even as OPEC Plus have begun discussions about an oil output cut. WTI crude fell 1.1% to settle at US $81.23 per barrel. Brent crude closed at US $88.49, down 0.9% on the day. Gold prices fall. The stronger dollar and rate hike concerns kept gold prices down, and spot gold added 0.1% to US $1,660.24 an ounce. US gold futures fell 0.02% to US $1,660. Meanwhile, the iron ore futures surged with the Dalian benchmark contract hitting a 2-week high, underpinned by increased construction activity in China. The most traded January iron ore on China's Dalian Commodity Exchange closed 0.8% higher at 722.50 yuan, or in US terms $100.38 a tonne. In Australian company news, Sandfire, the diversified and sustainable Australian miner, announced that their CEO, Carl Simic, has stepped down as Managing Director and CEO. This is after 15 years leading the company. In other news, after the collapsed $2.5 billion merger deal last Friday, which saw Link Group's share price plummet, digital property trading platform PEXA's CEO Glenn King told AFR that he was not willing to allow Link Group's intentions to offer shares to their investors subordinate PEXA's strategy, and CEO of Link Group Vivek Bhatia said they were thinking of offering Link's close to 40% stake in PEXA to investors. And Glenn King said there was a lot of interest in buying PEXA, so it could lead to positive, creating more of a free float. ASIC has made an interim stop order preventing Australasian Property Investments Limited, or Apple, from retail investors accessing the Apple Essential Retail Income Fund, and the reason being due to non-compliance of target market determination, and this will include the prevention of general advice, recommending or providing the product disclosure statement for the Apple Fund for 21 days. Thanks so much for watching this edition of the ASX Stocks for Breakfast. Hope your day in trading goes well. Do keep watching Kalkine TV for more of these expert talks, market updates and business news. Sage signing off.